You are listening to chartingwealth.com for Monday, the 14th of March, 2016. We are finishing up another two-day candle at the end of the day on Friday as we go into Monday. What have we seen happen in the charts? Well, we had a two-day trend line that was broken back on the 9th. However, the market zoomed up on Friday, so we are redrawing that trend line literally as I speak. We got a new trend line that has been drawn connecting three candles. The candle on the 1st, the 3rd, and the 11th had a down two-day candle on the 9th, but we have resumed our upward movement in March, 1.73% up. Now here's the interesting thing to look at. What do we see trying to occur? Well, that is a crossover, and those of you who are Johnny early may have jumped in this afternoon. Those of you who are being safe may be waiting. Derivative oscillator's not yet switched over, nor has the 4-hour chart crossed over going up. Looks like it's poised to do so. Remember, we waited for the rollback. That happened on noon on the 8th of March. And the market moved down that afternoon and then slid sideways for the next 2 days, then dropped down in the afternoon on the 10th of March and then zoomed up on the 11th, getting close to a crossover going up. Now remember, when the short chart parallels the big chart, that's when we want to jump back into the market going up. So you're looking for a good time to jump in. Some of you may have jumped in early. That's fraught with some potential problems, but also rewards, and we've talked about that before. That, of course, is something that we want you to experiment with. And as we talk about here, we're not a stock calling service at Charting Wealth. We are an education company. We talk about you opening a virtual account at one of the online brokers and practicing. This is the cheapest way to learn, by practicing. We do not give advice on trading or investing, but we want to teach you to read a chart so you can make your own decisions. So that's where we are, getting close. Now, market was technically up for the day 1.73%. Exciting. Now let's look at the S&P 500 as shown to us by SPY. Looks about the same way. In fact, we don't need to redraw the trend line because we have a nice trend line connecting 4 candles going up. We have seen the derivative oscillator still lost a little speed today. The MACD and the signal line move further apart. On the Standard & Poor's 500, if we drop from our 2-day chart to our 4-hour chart, what do we see? We see a crossover occurring very slightly toward the end of the day. Some of you may have jumped in this afternoon, somewhat premature. We don't have the MACD rolling over yet, but again, I know some of you are looking to get in, but again, we like to make sure that the crossover has been confirmed before we do that. The S&P 500 was up 1.6% for the day. Now, let's go to our last index before we get to gold. That is the Qs. What's the Qs? It's a NASDAQ 100. What's it doing? Well, it broke over the 2-day trend line back on the 9th, and the candle on the 11th has not risen above that. Technically, it was up 1.74% for the day, still in positive territory. On the MACD, derivative oscillators lost a little bit more speed, but let's check out what our 4-hour chart has done. Not yet crossing. Derivative oscillators gone into the green. We shall see what we shall see as the market opens on Monday. Don't have a trigger yet. One thing we can try to do on the Qs is, well, it's not really even possible to draw a decent trend line on the Qs at this point because we really can't connect much of anything. Well, maybe we can get close to connecting. It's going to be hard to really get more than one candle. Maybe we can get, don't really have that the best of trend lines, but we are above the best trend line that we can draw at this time. And we do have derivative oscillator still, of course, in the green, and the MACD has diverged a little more at the end of the day. Again, NASDAQ 100 was up 1.74% for the day. So we're in positive territory on our MACD, on both our 2-day, all of our 2-day charts, and we have all of our charts trying to rotate to the positive on the short charts. Now, lastly, Let's look at what's going on with gold. Gold was down as much as the markets were up today. They were all up about 1.7%. Gold was down 1.7%. Again, looks like it's getting long in the tooth. We have a doji for the 2-day candle on the 11th. What is a doji? Well, a doji is a sign of lots of indecision. It is a type of candlestick pattern that means lots of indecision, because the market pretty much closed where it opened on a doji. Now, we use a different type of candlestick. We use the Heiken Ayashi. Encourage you to read about that, Heiken, Ashi, A-S-H-I. There's a dash in between those two words. It does appear that we are getting closer to a crossover going down. Derivative oscillators in the negative on the 2-day gold chart. If we look at gold on the 4-hour chart, what do we see? We see gold crossing over, staying down. We talked about it crossing over, going down the other day. It has stayed in that and has gone much, much more down. Again, that down movement has not caught up with how much gold went down back on the 9th, but it has continued to accelerate as far as the derivative oscillator goes, and the divergence between the MACD and the signal line has heated up. Still not below the 2-day trend line, but appears to be trying to drive down toward it. Continue to watch gold. Let's see if that run-up is going to finally end. That is where we ended the market on Friday the 11th as we go into this next week. Thank you so much for joining us. We always appreciate having you with us here on Charting Wealth. If you have questions, problems, concerns, let us hear from you. Go to chartingwealth.com. Email us. Follow us on Facebook, Twitter, YouTube, Instagram. We're happy to hear from you, happy to help. We want to see you succeed in learning how to read stock charts so that you can make wise investment and trading decisions on your own. Thank you so much for listening from chartingwealth.com.